Hello and welcome to this slide pack of the Certified Cameroon Tax Expert Certification Training Program. Today we shall be looking at the second video in a series of 7 of the Cameroon payroll system. In this video we shall be covering the computation of the taxable income from employment and the personal income tax on employment. Taxable income is simply the value of all taxable elements of the employment income, such as salaries, wages, emoluments, including the taxable value of all benefits in kind and in cash. Benefits in kind and in cash have a limit to which they are taxed as shown in the scale below. So electricity can be taxed to a maximum of 15%, a maximum of 4%, housing to a maximum of 15%, food, for example, to a maximum of 10%. Now what these rates mean is that the amount of the benefit that is taxed is the lower of the benefits amount and the amount from applying the applicable rates on the taxable wage before these benefits. So suppose a man has a salary of 100,000 and has a housing benefit of 50,000. So his taxable salary before this benefit is his salary of 100,000. Though he has a salary of 100,000 and housing benefit of 50,000. So we say that these rates are applied on the taxable wage before the benefits themselves are added. Allowances not mentioned unless they are exempted by a contrary provision are fully taxable. So these are the only allowances that are taxed to a maximum of the rates you have on this table. So any other allowance must be taxed 100% unless it is specifically exempted by a contrary provision. Any other allowance out of those stated here shall also be treated as an addition to the employee's main salary and wage for taxation purpose and shall be added to the taxable wage before the benefits above in determining the applicable scale. The only exceptions to this category are vacation pay, sick allowances, and year-end bonus or performance allowance. Now, though these amounts will still be taxed 100%, but they are not added to the taxable wage before applying the wages with applicable rates on this table. Note that there is a distinction between transportation allowance and car allowance. In the table above, where we said that each vehicle owned by the employee, a maximum of 10% would be taxed. So this is only meant for those who have a car or are given a car allowance. So transportation allowance is meant for those using public transport to get to work, while car allowance is for those either under a company car or expected to use their own car to commute to work. Let us take an exercise to refresh our understanding. We shall continue with the exercise we started in video number 1, where Mr. Abraham earned the following income with his employer ABC Limited. So Mr. Abraham had a salary of 2,200,000 for the year. He received a scholarship of 1 million a housing allowance of 400,000, a car allowance of 500,000, a family allowance of 300,000, labor medal bonus of 250,000, meals of 550,000, a disability allowance of 8 million, and a separation pay of 2 million. So using this information, calculate Mr. Abraham's taxable income for the said year. The first thing we need to do is to look at each of these income type Mr. Abraham earned and analyze them for tax purposes and determine if they are taxable or non-taxable. First of all, salary is 100% taxable. Scholarship is not taxable. Housing allowance is taxable, though not to a full amount. Car allowance is also taxable. Family allowance, the Cameroon General Tax Code states that family allowance of any type is non-taxable. Now, labor medal is also non-taxable, provided the occasion where this medal was given was presided over by the minister in charge of labor. Meals allowance is taxable. Separation pay, the disability allowance is non-taxable, but the rest of the separation package is taxable. So from this analysis, we can pull out elements that are exempted from the personal income tax. So this will include the scholarship of 1 million, family allowance of 300,000, labor medal bonus of 250,000, separation package of 8 million. So we have a total amount of 9,550,000. The second step we need to do is to now calculate the taxable income as it is shown on this table. We have it in Class A and Class B. Class A are the employee's taxable wage before inputting allowable physical benefits. So when we look at all the elements that are taxable, only two will form part of an employee's wage before adding physical benefits. So this will be Mr. Abraham's salary of 2.2 million and his separation pay of 2 million. So he has a total amount of 4,200,000. Now he has a housing allowance of 400. So next we have his housing allowance of 400,000. So this is taxed to a maximum of 15% of his taxable wage before the allowance is added. So 15% of his taxable wage before allowance will give us 630,000. And so since his housing allowance is only 400,000, it means we'll tax the full amount of 400,000. His car allowance is 500,000. The maximum that should be taxed is 10% of the taxable wage before this benefit. So in this case, it means we'll only tax an amount of 420,000. Means are taxed to a maximum of 10% of his taxable wage before the benefit. So meaning that an amount of 420,000 francs will be taxed. So in Class B, we have a total taxable amount of 1,240,000. Adding this to what we got earlier in Class A, so we have a total taxable income of 5,440,000. Next, we shall now look at the computation of the personal income tax. To determine the employee personal income tax, the taxable income calculated earlier is further reduced by deducting a few elements from it. So these are 1. 30% of the taxable amount to cover for incidental business expenses that the government of Cameroon has given to all wage earners. Then next we have to also remove a personal allowance of 500,000 given to all wage earners per financial year, and also deduct all contributions paid to the National Social Insurance Fund for compulsory retirement. So that final figure arrived at, which for the purpose of this training we shall call net final taxable income, is then taxed using the following scale. So amounts from 0 to 2 million a year will be taxed at 10%. Amounts from 2 million to 3 million a year will be taxed at 15%. Amounts from 3 million to 5 million a year will be taxed at 25%. And amounts above 5 million a year will be taxed at 35%. Now, the Cameroon General Tax Code and related finance law also stipulates that the amount of personal income tax gotten must be increased by 10% to cover for additional council tax. Exercise number 3. Continuing on from the example we started earlier, determine Mr. Abraham's personal income tax for the year, assuming he contributed a total of 100,800 francs CFA for the financial year to the National Social Insurance Fund as retirement pension. From solution 2 in exercise 2, we calculated Mr. Abraham's taxable income at 5,440,000 francs CFA. To compute his personal income tax, we first need to determine the net final taxable income as shown on this table. So we have his taxable salary from exercise 2, which is 5,440,000. Now less 30% of this amount for incidental expenses. So 30% of 5,440,000 is 1,632,000. Then we also reduce 500,000 that is given to all wage earners per fiscal year, and then all his contributions that were paid as retirement pension to the National Social Insurance Fund. So a total deduction of 2,232,800 will be done, giving him a net final taxable income of 3,207,200 francs CFA. From this amount, we may then calculate the personal income tax using appropriate brackets as shown below. So we said amounts between 0 to 2 million will be taxed at 10%. So the first 2 million of his pay will be taxed at 10%, giving us a personal income tax of 200,000. The next amount, which is 2 million to 3 million, will be taxed at 15%. So meaning that 1 million of his 3,207,200 will be taxed at 15%. That gives 150,000. And amounts that fall between 3 million to 5 million will be taxed at 25%. So the balance of his net final taxable income that falls in this range, which is 207,200, will be taxed at 25%. So giving a personal income tax of 51,800, and none of his salary falls above 5 million. So he will not have to incur a principal personal income tax of 401,800. Now we said the law says this must be increased by 10% to cover for additional council tax. So 10% of that same amount will be 40,180 francs CFA. So that gives a total personal income tax for Mr. Abraham of 441,980 francs CFA. Thank you. Hope you enjoyed this course.